All right, welcome to this episode of Market Shares. I'm your host, Tony Blodgett, and today is going to be a fun conversation because I'm with my good friend, Jason Gray. Jason, welcome to the show.
Thank you, sir. I'm excited. Let's do it.
Let's do it.
All right.
All right, hold on a second. I'm going to decide what we're going to talk about. Just kidding. Just kidding. I have no idea what we're going to talk about. But you know what? This will be easy because me and Jason are really good friends. We worked together for, a long time now.
Yeah.
A long
Mortgage
time.
Advisor Group. Yep. Had a little gap. Back here again. I've been here 8 years. It's been fabulous.
Yeah. Well, it's been awesome. It was funny when I first joined New American Funding. I went to a conference. I actually helped you get a ticket to the conference.
That's right.
And then we hooked up so I can give you a ticket. And I'm like, dude, I'm so excited about this new job I just got. And I'm building the region. And dude, we connected and you were one of the first person to join.
It was great. Honestly, I mean, you had me fly down to Irvine, California. We had that little trip that went down there, and it was like the light sort of turned on at that moment, right? Meeting the, Patty and Rick and Christy. I mean, it just sort of felt like home. Felt like old school a little bit, right? And so it was really, really amazing. So and coming off the heels of that, and then we've been here ever since. I mean, we've been in the same location for the last 8 years, which is great.
Yeah, this office turned out to be a perfect one of our, like I said, our first location. We opened a branch in Everett where I sit, and you were the first, branch to join us after that initial group, and it's been awesome, man. I've loved to see your branch grow and thrive, and you guys are constantly one of the top performing branches. So kudos to you for running a great office here, and you still produce at a high level as well. I mean, I think a lot of loan officers that move into branch manager type roles, either one of two things happens. Either they focus too much on their own production and they're not able to actually support a branch, or they get too comfortable running a branch and then their own production falls off. And you've done a pretty amazing job over the years of finding that balance to do both.
Yeah, I think it is a balance, right? And you always want to see people succeed. Right. And so you build a branch, and, there's a core group of people that I brought on with us. Right. And that core group is still here today. And it is a tough balance. Right. You have a bunch of things that you need to do on a daily basis. But for the most part, it's not brain surgery. Right. It's really just checking in on everyone, make sure their files are getting done, make sure my personal production is being done. But at any point in time that they're having struggles, I'm stopping my production. I'll stop and take care of their deals first. My deals will always close, right? I'll get back to my deals. So that's been interesting, and I've learned a lot from you, right? And the great thing about New American Funding is the growth opportunities, and just the basic knowledge that by you running Mortgage Advisor Group before and now here in your current role right now, I don't think there's many managers out there today that know what you know. I mean, it's pretty shocking of when you have conversations with people or talk with realtors and have these things that you've taught me over the years. They're like, they shake their heads. They're like, what are you talking about, right? Yeah. And you explain it to them. They're like, oh, that makes total sense. So I'm super grateful on that, right? The biggest key, honestly, in regards to and what makes it really easy for me is the operations team. We talk about this all the time. Lisa in our operations team, the funding team, the processors, the underwriters, they're simply amazing. We always make a joke around the office. When's the last time I opened up Encompass, Tony?
Yeah, I don't think you know how to open up Encompass.
I can't. I don't even know. It's literally been 7 years since I actually opened up my Encompass, and that's just because I trust my team, I trust the operations, I trust literally everyone, and everyone's grown adults, right? They've all been doing this for years, and I've been doing this 29 years now. You're 23, 24 years?
Yeah, 25,
whatever
almost,
it is. Yeah. And releasing the interest to everyone is not comfortable.
No.
Right? It's not. But when you do and you get to that point in time, it makes it really easy. And then when I talk to people and they say, what you mean you don't open up Compass? Literally everything's in the OneDrive. And I literally work in and out of that OneDrive. I can be in Cancun and looking at my files, and I can know exactly what's going to go on or what's happening, and I can trust my team to sort of take care of everything. So it's been literally amazing.
Yeah. Well, I I think that you're, for the region, #1 producer for the year or close to it.
Yeah.
Last year, what kind of production did you do last year?
74
million. And how big's your team?
One.
Team of one.
Team of one. I mean, I got Melanie, who I share with, 2 other people. I've got Hallie, she's fabulous. Anytime I need Lisa, she's available, right? It's a pretty well-oiled machine, right?
Yeah, so I think this is important to point out. So Jason runs top-performing branch. He is a top producer in his own right. He has one LOA that he shares with other people in his office, and then, of course, a processor supporting the branch. So really, less than one LOA doing $75 million. It's remarkable how much productivity you get. I talked to a lot of top producers that do your production, and they would have a team of multiple people.
The hard thing is it's not like it's rocket science, right? I mean, really, it's just literally, working a little bit. But, we made a little change. We added Dana to the team. This will be an interesting thing. What I've been telling everyone is Dana's responsibility is to pretty much yell at me all day long. Make sure I'm on the phones. Make sure I'm doing my calls. Make sure I'm talking to my birthdays, my anniversaries, my realtors, doing my weekly updates, talking to my agents, all that stuff.
So really it's kind of a client concierge / executive assistant / accountability partner.
Yeah, someone just yell at me.
That's
pretty much what it boils down to. That's what it boils down to, really. I mean, we all get caught into our day where there's distractions, right? And there's just sometimes that you just need someone just nudging you just a little bit all the time and saying, this is what your day looks like and this is what you need to do. And we're new into it, but so far I'm way more productive today than I was literally a couple months ago.
Yeah. Well, I also know that, and this is pretty remarkable. So we have a program here called Local Buyer Connect where we hand out leads. Yep. You obviously don't need the leads, but you'll take them on occasion, or you'll wait for the phone to ring a couple times, and if no one else takes them, you'll be like, okay, I'll pick it up. But your ability to convert these leads is like off the charts. So for loan officers out there who are buying leads or they're working online leads, I mean, dude, what is your secret to be able to take someone who's a lead call and have such a high conversion? Because it really is like over the top conversion.
Yeah, and it was, honestly, Tony, it was a trial period for about 90 days. Dusty asked me to do something, and I was like, I'll take a call, and I won't answer it until it rings the third or fourth time, and I'll only do it when I have some time on my hands. And it was really rare when I took the phone calls. But when I took the phone calls, I would literally just get off the phone, and I would just, how... I'm not very salesy, right? I'm really just here to help you, right? And if I'm talking to you as a consumer, I'd be like, hey, Tony, how's your day? Great. What parts of Washington State are you looking to purchase in? And I just sort of get into the groove, make them feel comfortable, and then get them excited. Based on what you're telling me, you can go buy a house tomorrow. Let's get this thing going. And they're like, okay, well, what do we do? I'm going to send you a link right now to do an online application. Let's get it in. Based on what you're telling me, I think you qualify for a 5% down conventional loan. This is roughly what your payment is. Let's talk about tax benefits. Let's talk about the market. We're talking about all that stuff. And I said, do you have a realtor? And if they say no, it's a great opportunity for me to say, great, I got a realtor for you. Whatever it be, in Spokane, Moses Lake, Walla Walla, Seattle, Bellingham, wherever it's at, I got a realtor already in mind. So then I get that realtor on the phone and say, hey, Crystal, got a deal for you. Here's the story. Get on the phone right away. My close ratio goes way up if I have a realtor involved, because I'm not going to lose the deal. And those deals that are coming in, if you're taking internet leads or call center leads or whatever it is, those clients will go to the next person as soon as someone tells them to go do something right away. Right. So your close ratio increases dramatically if you have them associated with a realtor or even their realtor, right? And the problem with their realtors, they're going to redirect them to someone else. So you definitely, if they're working with someone, you respect that. You encourage them. You get all positive. It's a unique opportunity then for you to meet a new realtor, of course. But, man, you just got to get them excited. Get them pumped. Get them going. And then give them hope. Now, let's say they can't purchase today. Let's say there's a credit issue or an income issue or whatever it is. You don't just hang up the phone with them. You let them know, if you do X, Y, and Z, I can get you there, right? And you have to have a plan, and you have to have them set up. And then, there might be a conversation whether you're on the phone with them for 5 minutes or it might be a whole hour, right? But pretty rare. It's like 15 or 20 minutes, and I can have them excited enough at that point in time. And if you're going against call center people that are typically talking to them, the conversation they're having with me is completely different than a call center person. So my close ratio goes up because they talk to the next person. Let's say whatever ABC company, because I don't want to name a company, but let's say a company, and they can't sell.
And rhymes with pocket?
Maybe. So in doing so, they just don't have. They get like, I'll get on the phone with a client and they'll say, those 10 minutes, I learned more from you in 10 minutes than I've learned from the last 5 or 6 conversations I had with my normal loan officer.
here's what I think you're saying. Correct me if I'm wrong, but your conversation is relational and emotional
100%.
versus like transactional
Yes.
and like,
Yeah, don't be rigid. Just have fun. Okay, so let's say they're in Spokane. Gosh, I grew up in Spokane. My dad still lives next to Shady Park High School. What part of Spokane are you in? And get to know them a little bit, right? What's your goals? Why are you looking to purchase? And just having a couple extra questions leads into that personal piece where they think you're in their best interest, in which 100%, I think and I think anyone that works with me knows, I'm always looking out for people's best interest. I refuse to do a deal if it's not in their best interest. I won't do it.
So what percentage, if you had to guess, of those leads don't have a realtor that you can refer out to a realtor?
Over 50% for sure.
Wow.
The clients coming to us earlier in the process is very obvious over the last 24 months. There's no doubt about it. Yeah. They're hitting us first before they're talking to agents. Like, I don't want to go out and look for a house until I know what I qualify for. Yeah, I mean, it's incredibly obvious. Yeah.
Well, let's talk a little bit about your business, and then I'm going to ask you about just what you see challenges with loan officers and their business. But let's just back up. Like, how did you get in the mortgage business? Give us a quick, how did Jason Gray become a loan officer?
Wow. Okay. So I used to run restaurants for a living, right? And
you're one of those guys.
I was one of those guys.
Okay.
I was a restaurant manager.
A lot of restaurant people, a lot of successful mortgage people came from the restaurant industry, including my dad, actually.
Okay, so here it goes. Burger King, Marie Callender's, Chili's. I get a phone call from one of my old waiters from Marie Callender's. He says, I'm buying a car in Arizona. And I'm like, okay. He goes, why don't you fly down with me? So we literally go by this 4Runner. We're driving it back. And I said, what do you do for a living? He goes, dude, I'm a mortgage lender. I work for this company called Norwest Mortgage. They're amazing. And I'm like, well, can I get a job? He goes, no, you can get a job there.
No.
And I go, Norwest is super cool. And so I go, it's so classic. He goes, but I can get you a job. You remember the little brick phones? The bricks? Picked up the phone, calls this one guy, Peter. He goes, Peter, I got this guy. He needs to come work for you. Peter goes, he's hired. Literally the next day, when we're back up in town, I'm starting a job in the mortgage industry.
So he had a brick phone.
He literally had a brick phone.
Which means he was killing it.
He was killing it, right? Exactly. So Peter, who was a great guy, right? It was a complete sweatshop. I literally get handwritten 1003s, handwritten good faith estimates, handwritten truth and lending disclosure statements. I could still run an APR by my calculator to this day, right? Because I did thousands of these things. And so that's how I started the business. And I literally went to the owner and said, what do you do with your old loan officers that are no longer no longer work for you? He goes, well, the files are sitting in my garage. I said, can I go to your garage? And he goes, yeah. So the first month, I go in there, find the loan officers that weren't working there, someone that had a 10% or higher interest rate at the time. That's right, 10% or higher. I would then give them a call, and I would refinance the deals. Little to my knowledge, I pulled in 15 deals in my first month.
Wow.
Crazy, right? But what I didn't know, you got to lock in your loans, people. So I didn't lock in my loans. No one told me about locking in loans yet. And so I didn't have any clue, right? So anyway, so I learned a valuable lesson way early, like month number 2 in the business. Rates went up a little bit, and those deals didn't exist anymore. So it was a tough lesson learned on month number 2.
We may have had a conversation or two about a loan that wasn't locked, though. I mean,
yeah,
it still
right.
happens.
There's still happens from time to time, but it's pretty rare. But so that's how I started the business. It was an interesting journey. And it's just like the restaurant business. It's just a people person business, right?
Yeah.
I mean, you can walk up to a table as a waiter or server or manager, and you know what you're dealing with right when you walk up the first 5 seconds.
Yeah.
Easy.
So you've always had a philosophy. You're kind of a volume guy versus a margin guy. I've always appreciated that about you.
Yeah.
And I do see people in today's day and age that are focused more on volume and whether it's a refinance, it's a corp lead or taking an internet lead and making lower comp, you never really care about that piece. You're just like pump the volume.
Yep.
I love that about your business. Let's talk about, you've had some really good realtor relationships over the years. Yeah. So what do you think is the formula? How many top realtors do you think you need to have? How many, how often are you calling on new relationships? Give us an idea of the formula that's worked for you over the years.
One thing I could always be is better, right? You always look back at your career and you take a look and say, what could I have done, right? And you got to stop looking back at your career. But I think you need a good core 7 or 8 really good quality realtors. The ones that are going to feed you business consistently, and they're your advocate with you, with them being their advocate, right? And so, you got to just do little things. You got to show up to sales meetings. You got to talk to them, offer open houses. What can you do to just be there for them? and they know you're there. They know you're a genuine person, right? Building relationships with realtors is not easy. It's not an easy task, right? It could take years to build a relationship, or it could take a couple weeks. And work with the right realtors that you enjoy working with is really important too. I mean, that's really key. But I mean, could I always do better? 100%. I mean, I look at that on a daily basis that, man, I should have made those extra 2 or 3 phone calls or followed up on these extra deals. But I'm trying to become better on a daily basis on that. But yeah, I say 7 or 8 good quality realtors, not onesie twosies, but some good quality ones. Ones that are doing like anything over 15 deals a year.
Okay.
Yeah.
No, I've always had that, 7 to 10 quality relationships. And I think the key there is focus on the relationship. It's like everything. Focus on the relationship. The transactions will come.
Naturally.
You can't be focused on the actual transaction.
You really can't
itself.
push that relationship, right? It's either going to come or it's not going to come. And honestly, you don't want to be fake. I mean, at the end of the day, you don't want to be fake. You don't want to be flashy. I mean, you just want to just sort of be there. I'm here to help you. And they all know, and my family knows as well. It's weekends or evenings or 10 o'clock at night on a Sunday or Saturday, and if the phone rings, they're going to get a call back from me, or I'm going to answer the phone. I'm going to take care of them as much as I possibly can. It's a 24/7 job. For those of you who do not treat it that way, it really hurts you. I'm going to beat you for sure.
Yeah, I'm going to beat you. I mean, how important is it to answer your phone on, when it rings? What do you think?
It's so important.
Yeah.
It's 100%. I mean, and let's say you're in a meeting with a client or a referral partner or whatever it is, and you are done with that meeting, your first number one thing is pick up that phone, check what missed calls you had, check your emails really quick. Is there something you can address right away before you get that car started down the road? Right? What can you do? But speed and time is really important. You want to be treated like someone wants to treat you. So for example, is like, Tony, if you need something right away, you want it right away, right?
Right.
So do I.
Yeah.
Right. And so if I'm on the other line, I want that answer right away. The other thing is, my best advice is never ignore bad news. Deal with that today.
Yeah.
Don't deal with it 2 or 3 weeks down the road, or it's going to get better, it's going to be fine. No, you get everyone on the phone. You call the client, you call the realtor, say, here's our problem. This is an issue we're dealing with. What can we do to solve it? Or do we need to get out of the transaction?
Well, this is an important one, right? So even if you might know that it's not a deal killer, but it's still a challenge,
yes,
you still want to talk about it, because look, you don't want to just frighten everybody,
no,
but you also want to be able to show that you bring value to the transaction, and that there are challenges that happen, and you're equipped to deal with those and overcome them. So look, sometimes you think you can solve it, you tell them about it, and then it really goes bad. Hey, at least you told them about it.
Yeah.
You didn't sweep it under the rug. Worst case, you tell them about it. You solve the problem that afternoon or the next day.
Yeah.
And then at least they knew that there was a problem. You overcame it. You were calm. You were cool. You were collected. You communicated. That's what people want.
A lot of times a realtor can be a huge help to you in regards to, like, let's say you're not getting the data that you need from the consumer. And you're like, man, I've requested this 7 times. And sometimes it's a CC on an email or a phone call or whatever it might be, and saying, man, Mr. Smith's not giving me X, Y, and Z. I'm struggling, right? We might not close on time. I've told him, but they don't seem like it's really serious. And then that realtor gets on the phone and says, your earnest money's at risk, right? and they're like, what? And then they get it for you right away. But sometimes those little extra pushes from other people in other directions, hearing it a different way, can make a big deal. It's almost like when I'm a manager and I need to jump in on a situation, or you need to jump in on a situation. Sometimes hearing it from me, even though someone's told them that multiple times, hearing it from me in a different manner sort of works.
Yeah.
So anytime there's a problem, for sure, 100% jump on it right away. Don't let it linger, for sure.
Well, I would even go back to the phone call thing, and this, some people may disagree with me, but when I was a newer loan officer, or if I'm really slow, even if I'm at the dinner table and my phone rings, I'm going to excuse myself and pick up the phone.
I'm the same way.
I'll tell you why, is because when, I know that I would do this. If I have a question, I'm going to call the person who I think is most likely to pick up their phone and give me the answer, even if they're not the very best person to answer the question, because I kind of need an answer right now.
Yeah.
And this is what you're going to find with realtors, is that they're going to call the person who's going to pick up the phone, get them their answer. They may be sitting with the client right then, and they go, let me call my lender. And if you don't answer, it's just they're calling the next guy. And
100%.
the guy that always answers is the one that gets those deals. And it's hard for people to go, well, I got work-life balance and it doesn't work. Look, you got to I used to tell myself every time the phone rings, it's $1,000.
Yeah.
So will my kids understand if I have to excuse myself, take a quick phone call, answer a question, or even say, look, I'm right in the middle of something right now. Let me take down your name and number. I'll call you back in 15 minutes or 20 minutes. At least you took their call, you set the expectation, and then you could get back to them. It's easy right now to go, oh, I'll call you right back or send a message. I encourage you, especially if you're not hitting your goals right now, pick up the phone when it rings.
Yes.
And I've had so many people over the years say, Tony, one of the things I've always appreciated about you is you pick up the phone when I call.
Yep.
And you can't always do it, but if you can, go
try.
out of your way to do it.
Absolutely. So, and let's say you're the backup lender for a realtor, and they call their number one, and you're their number two or number three or number four, but you pick up the phone, and you do that a couple of times, they're going to remember,
Yep.
right? And they're going to remember, go, Jason always picks up the phone. Now I might be the number one or number two. There'll be some times that, it's uncomfortable. Might be your anniversary. I'm sure I've done it. I'm sure you've done it.
I'm sure.
And so you pick up that phone, and your wife's looking at you going, you just really answer the phone. Yes, yeah, honey. But we all do it. It's fine. Whatever.
Well, I think that it's so different. And again, for people who've been in this business, maybe not as long as we have, you really, if you want to be in this long term, it's got to be a lifestyle, right? So like to me, mortgage banking isn't a job. It's something that weaves into my life. And there's benefits to that. There's drawbacks, answering the phone on your anniversary while you're at dinner.
Yep.
I guess you could say that's a drawback. Then again, it also probably paid for my dinner.
Probably did.
So that worked out.
Exactly.
But there's other benefits. You also have flexibility, to go on vacations and do other things. And as long as you can answer your phone, you can do your job. And so I think there's pros and cons, and you have to feel comfortable weaving it into your life and not saying, well, I have this strict, work-life balance, and at these hours I don't answer my phone. Mortgage banking may not be for you.
Probably not.
Probably.
Yeah.
Probably not.
Yeah.
Well, so let's talk about the challenges that you see other loan officers having. Obviously, you're putting up still really good numbers right now.
Yeah.
So what is plaguing our industry? What are the biggest challenges you see loan officers, whether they work in your branch or other ones that having in this market, and what can they do about it?
I think part of it was, for me, purchase business has always been important, right? And was I doing refinances? Of course, 100% I was. But was I still in contact with my realtors? And I think a lot of these guys, it was easy street, and they just forgot, and they just didn't work, right? And so I use that to my advantage, to be real with you. Like I say, I've always been here, right? I've always been doing it. I use me being in the business for 29 years as a huge thing. But I think messaging and really having a clear vision what I think is going to go on in regards to the market conditions, where I think things are going to happen for the consumer, and how things and structuring and being really strategic right now is critically important. And having these one-on-one conversations with these agents and doing coffee with them and saying, okay, what are you struggling with? How can I help you? And then explain to them how you've been selling everything to the client, so they're on the same page as you, is huge. And so I think that's been my success, is just really messaging the right message. What's rates doing today? Why do I think rates are going to change? What do I think is going to happen on this weekly report? What are you doing? How long has this house been on the market? And just literally just going through those questions, and me coming up with a plan, sort of what I think is good for them, and then relaying that to the agent. It's important. I can't stress it enough on having these one-on-one conversations, and trying to understand what they feel. Because they're struggling, right? Yep. And their commission check is real, maybe that only commission they're getting for the whole month, and they're relying upon you, and you need to make sure that you're giving them the right advice to make sure that deal closes. It's really important.
Yeah, I think loan officers underestimate how much their understanding of the financial markets breeds confidence in their referral partners.
If you hear it, like you're a steward of listening to audiobooks in the car, or listen and educate yourself. I'm the same way. On my way into work, on my way home, I'm somehow educating myself somehow. Either that, or I'm on the phone talking to someone, or I'm trying to get some relevant information about the market conditions, or stock market, let it be bond market, whatever it might be, right? And so it's back to being a professional in this business. You really have to work at this business. You have to actually put in the hours. You got to put in the time. You got to educate yourself. It's really important to have literally a really good understanding. So if you have a conversation with a client, you are definitely having a much different conversation with a client than most. And so, being really in tune with what the market's doing is really important for sure, especially in this day and age.
Yeah. So on that front, let's talk a little bit about investments because, you're 29 years in the mortgage business. You've had a lot of success. We've made some good investments over the years. We've made some
good bads.
We've made some bad investments.
Yep.
Me and Jason like to dabble in things sometimes.
Sometimes not so good at
together.
it, by the way.
Yeah. I probably should not try to make a career in options trading.
Me neither.
That didn't go great for me.
No.
It was fun.
It was fun.
Yes,
but I'm not great at it.
I think if you have the time and the knowledge, it can be great. It wasn't great for me. But what are you seeing today? Where are you investing your money? Are you keeping it on the sidelines? Are you still buying real estate? What are you seeing as investment opportunities for people that might have some cash set aside?
That's a great question. So I have the luxury of my wife being a retired realtor, right? And so she has a really good eye for things, and we've done pretty well. I mean, we bought that property in Texas, turned it into a rental. Maybe it wasn't the best situation, but we got out of it. No skin off our back on that one. Kim purchased a property, a recreational lot up in Sammamish, and turned and burned it, and she did really, really well on that one. And so I'm looking for those unique opportunities of
real estate opportunities
that are going to be out there, and there's going to be some really good opportunities. And I think if you can look at what the market's doing, market conditions, and finding the right situation, you have to be patient. It has to be the right thing, right? It can't be anything too crazy. If you have money sitting on the sidelines, just stick some money in some T-bills for right now. Get 4% money on that for nothing.
Yeah,
just sitting there. That's a good idea.
This is really good advice. So I was talking. I have some money just in a Merrill Edge account. It's sitting in a cash position because I don't want to really be in the stock market right now. At least that's just where my appetite for risk is at, and that'll change, I think, as we see things evolve. But I was talking to my Merrill advisor because I had to move some funds around to do a real estate transaction, and they said just the interest rate in my preferred deposit. This isn't even like a CD or a T-bill, just a preferred deposit account at Merrill was paying 3.49 as of this morning.
Crazy. No risk.
No risk. So you guys, if your money's sitting in a normal checking or savings account, I would talk to your investment brokerage and even see if they just have a preferred deposit account because you can make 3.5% almost just there. And then of course there's 3-month CDs, 6-month CDs. There's 1-year Treasury bills. I mean, they're paying. They're going
4.6 or 4. And if the Feds go for another half in December, then what are they going to pay up to close to 5?
Yeah,
I mean, it's crazy.
So I know that's a very conservative approach, but
safe.
It's safe. It preserves your principal, and it's better than having your money just sit there doing nothing.
Yeah, and if there's a unique investment out there, vet it out, think about it, talk to Tony, talk to myself, say, what do you think about this idea? And then, we'll give you our 2 cents. It might not be perfect, but we'll give you 2 cents on what we were thinking. But there is going to be some great opportunities out there. I mean, you could even talk about assumable loans if you wanted to. I mean, there's some crazy little things that no one's even talking about yet that really is out there, but no one's educated enough to do it. And that might be a next thing to talk about at some point in time.
Yeah, I think there's going to be a market for assumable loans. I don't think these interest rates are going to turn super quick, so we still have a window of time to capitalize on those opportunities. I know for a while you were into the automobile market a little bit, and now that's turned a little bit. Yeah,
Jack's about to return 16, so I've been literally hanging on to the last couple of days before I pull the trigger on 2 things. So I'm really literally right there right now.
I think there was a time where you could buy some cars at auction or whatever, and then resell them and make some money. I'd be careful. Did you see the Manheim numbers this morning?
Like down 2.5%.
Down 2.5%. Yeah. It's going to be good for inflation, but used car market is.
Well, did you want to talk about inflation a little bit?
Yeah.
Okay, so this inflation issue is. And this is my 2 cents, and I could be 100% incorrect here. So I think it's a combination of 2 different things. Obviously, money supply by the government spending a lot of extra money. That's one big factor, right? But I think this whole supply chain issue is creating a whole nother mess that I think they're not factoring into the whole inflation thing. And then, unfortunately, really stomping down on the oil industry was really a very poor move. I think that was premature. I know we need to move to that direction, but I think you need to do a combination of being balanced, and they're not balanced. And so I think those 3 things are a big deal. And I think the Feds are sort of realizing they only have so much power.
Yeah.
Right? And so, they're raising interest rates, and like Powell said, and you had said just in an earlier meeting about how that one gentleman asked a question to Powell about the stock market, which the stock market was down at the time when that guy asked that question, by the way, when he said the stock market was up. But then Powell squashed that guy super fast. Yep. And when that happened, that really freaked the markets out. And so they're going to go too far, which is okay. Let them go too far. And at that point in time, it will flip. I'm really thinking towards second or third quarter next year is I think when things will start feeling a little bit better. And it might be earlier than that with this CPI report that's going to roll out this week. But it'll be pretty interesting to see how this next 6 months turn out. Let's talk about those tech jobs. I mean, you're talking about Twitter and now Facebook or Meta, whatever you want to call them, and Google stopped their hiring or letting people go. Those are some hard numbers that are going to hit in the employment numbers. They won't hit this week, but they're going to hit over the next few weeks. And those are some pretty high paid jobs, which with the combination of everything else, that could start turning that corner a little bit. But yeah,
well, if we see a CPI read that's lower year over year, and we start seeing job softening, those two things together, then it's like, okay, that's the term we need to see.
I think so too.
But you're right. I think that Powell knows for the first time ever, raising interest rates in this particular inflation cycle is not enough to get it under control.
Not working enough, at least, yeah. And typically this would have really helped dramatically, but I think supply chain issues, the oil issue, and just global economics right now is just weird.
Well, the way I see it, to me, it's really simple. COVID was a 2-year, train wreck that plowed through, both the health of our citizens, but also the economy of the United States and the world. And that was just a horrible 2-year experience. And this is the tailwind of that going through. So it's not going to follow any normal cycle because it wasn't created by a normal cycle. Yeah. I don't think it'll last 2 years, but it's definitely going to be disruptive, and it's not going to follow the normal patterns because it was created by something that's unprecedented with COVID. So I do expect it to turn, but maybe not as quick as some other industry experts. And I'm okay with that.
I'm too. I'm totally fine with it.
There's opportunity. Let me just say this. There's opportunity in markets like this.
Every market.
For guys like you to pick up market share, there's loan officers. This is like the great cleansing, right? You're going to see people who were dabblers in this industry are going to be getting out. They're going to be forced to get out and go get a regular full-time job. So there's going to be less competition for me and in my role. I mean, there's recruiting opportunities. There's going to be companies that decide that, hey, I don't want to give back all the profits we made the last couple of years. And they're going to want to go through, there's going to be M&A, there's going to be consolidation, or just companies just shutting down their doors, and that's going to create a lot of opportunity for recruiting and growth of companies who are in this, that are strong, stable and in it for the long run. There's huge opportunities. So I'm okay with, just squeezing it down a little bit more before we get relief, because those of us that are lifers in this industry, we're going to be able to benefit from some of that.
100% correct. Yeah, I think this is a good cleansing for all of us, right? I do think you're right. I mean, it's really interesting to see these publicly traded companies that their numbers are so horrible. I mean, those numbers are crazy. They were chasing after the dollars for free for nothing, and it's. I'll be interested to see what happens over the next couple of months with the earnings reports for those guys, because those numbers have got to look horrific.
Well, the stock market's down a lot this year, but it still is more resilient than I would expect.
I'm shocked. For sure. I mean, for it to be where it's at today is incredibly shocking, because I thought it would be worse.
I personally think it'll take a leg down before it bottoms out. But then I thought that in 2020, and my money sat on the sidelines, and I missed, a really good run. But
that triple shorted S&P was really bad for me. Anyways, it wasn't good.
We digress. Well, hey, look, we're 35 minutes in. Okay. We could probably do like a Joe Rogan episode.
For 3 hours.
We could go for 3 hours here and talk, but we're not going to do that. I appreciate people tuning in, watching these episodes. Jason, we definitely, now that we have this studio in your office,
this is great. Fabulous.
I'll be down here more often, and we can record a few more of these in the future, dig into some other things. But thanks for coming on.
Yeah, thank you.
Thanks for all you do for our region, for our industry. You're awesome, and it's been a great conversation.
Yep.
For those of you watching, thank you for tuning in to Market Shares. Please tell other industry friends, realtors, mortgage professionals about this channel. Like and subscribe if you haven't already, and we are dropping new episodes, as I'm sure you know, every Friday here on Market Shares. So until next time, bye for now. Thanks, Jason.
Yep, thank you.
All right, take care, guys.
Bye-bye.